Hello and welcome to our channel FINDAS, a place where you can be financially bindas. This is Samir Machwe. I am a wealth coach and a financial mentor, and I'm recording this video today from my home because there is lockdown in Maharashtra. The offices are not. We are not working from the office. We are working from home. This week we are starting a new series of understanding different mutual funds, and we are going to look at uh, one mutual fund scheme in detail in each of these videos. So let us start, and today we shall discuss one of the best known funds in the mid cap segment, that is the DSP Mid Cap fund. So let me quickly take you through the details of this fund. So what you see on your screen right now are the details of the DSP Midcap Fund. The fund manager of this fund is one Mr. Vinit Sambre, who is a old timer in the mutual fund industry, and he has been managing this scheme since the month of July 2012. This scheme, as you can see, is a mid-cap fund, and it has got a big AUM of 9,820 crores. The current NAV for the growth scheme of this fund is 70.9 rupees. The expense ratio is around 1.82%, and this fund was started in November 2006. It is one of the very good funds in the mid cap segment. You can see here immediately the performance of this fund. The blue line indicates the fund performance, DSP Mid Cap Fund. Last 1 year, it has delivered 23.57% CAGR returns as against the benchmark, which is Nifty Mid Cap 100 index, delivering 23%, and the average funds return in funds in this mid cap segment is at 23.5. But when we invest in mutual funds, we normally look at the long term performance that is later than the 5 or 6 year horizon minimum. So if you see the 5 year performance, this fund has returned 13.56% CAGR as against the index return of 10.1, and the other fund average returns of other fund at 10.8. 7 year performance is also very good, 19.37 and 15.77% on the index and 17.53% on the other funds in this category. The 10 year returns are also very good, almost 14% CAGR as against 10.26 by the index and 12.93 by the other peer funds. One very important point to note here is that we must, when we are looking at long-term investment, typically I say that in mutual fund you should invest your money for at least nothing less than 7 years. So in that case, this fund is one of the top performing fund, and you can expect 13-14% returns, which is beating the inflation by a huge margin, I would say. Here a graphical comparison of how the fund has managed to beat the index as well as the other peer funds in the same category. This is the calendar year performance here. The current year, this is 2020, calendar year 23.57. The calendar year 2019 was not so good, but the fund still managed to give 9% return, even beating the FD returns here. The index gave a negative return of 3.39%, and other funds just gave 3.3%. On the downside also, it has got good protection. You can see here when the in 2018 the market had corrected, but the fund has given minus 10% return as against minus 14.6 in the index and minus 12% in other funds. Calendar year 17, which had a good rally, the fund has given 40% returns almost. The in this case, the index and the category managing to give better returns, but always long-term returns should count. So one calendar year can be good or bad for the fund, doesn't matter. But in the long term, what counts is if it has consistently performed over a longer term beyond 17-18 or beyond 7 to 8 years, sorry. And in 2016, it gave a return of 11.44%, again beating both the benchmark indices. You can see the sector exposure. It is taking the highest exposure in the finance sector, namely the banks, then industrial products, pharmaceutical, consumer durables, and non-consumer durable. So here you can see if somebody invested 1 lakh rupees in the inception, that is November 2006, what kind of growth that money would have seen. So in this case, this uh, money would have seen a growth of, if it was put in the mid cap index, it would have grown to almost 4.96 lakhs, as against if it was put in this DSP mid cap fund, it would have grown to 7.09. So a stellar performance, I should say, in this fund. The SIP performance, if you did, I myself have a SIP in this fund since a long time, and it is giving very good returns for me also. Here you can see the SIP returns. The last 1 year has been great for the mid cap funds. It has given 51% return. The index has given 67, and the average of other equity funds is 54% almost. And in the long run, SIP is the best way to invest in mutual funds by any standard. So in 10 years, you can see the humongous return of almost 17% in this fund, and the one of the best funds, I would say, in this category. This is the same thing is indicated here graphically. So that is about this. Some ratios here, the standard deviation, that is the measure of volatility, is 6.65. Of course, this is a pretty volatile fund because the it's in the mid cap segment. The minimum investment is 500 rupees. So very affordable fund. Anyone can invest. SIP investment of 500 rupees. You can start a SIP of just 500 rupees. There is no entry load. And if you withdraw your money within 1 year of investing, you will have to pay the 1% exit load on this particular fund. These are the top 10 stocks here in which the fund invests. So Infosys, Ipca Laboratories, Cholamandalam Investment, Balakrishna Industries, Manappuram Finance, Supreme Industries, Coromandel International, Atul, Max Financial, and Jubilee. And these happen to be the top picks for this fund. So all in all, a great fund. Overall performance is exceedingly good. So if you are someone who is looking for a long-term investment beyond 7, 8, 10 years, then you can invest. And if you have a pretty decent risk appetite and appetite for higher volatility, this fund is well suited for investment, and you can start SIP in this at any point of time. It will continue to give good returns in future. This is one of the best managed funds in the mid cap category. So that's all for now. Don't forget to subscribe to our channel and follow us on Facebook, Instagram, and Twitter. That's it. This is Samir Machwe calling off for now. Take care, stay safe, and have an abundant life.